So we completed the special purpose reports for this trust, and that obviously involved importing the financial statement data out of, in this case, we used XML from Excel. And now what we want to do is complete the tax form. So over to Forms, add a form, and select your trust tax return. We'll notice a few things on the way through here. Give it a chance to load that data. Depending on the size of the data, it could take a little bit longer. Notice that interest and dividends are not activated. And if we have a look down here, we've got depreciation, which is activated. So I'll simply complete those, or complete the tax form with the data that's available. Doesn't mean that it's complete, and we may need to come back and fix some stuff up. So we'll have a look at income. Let's just open the financials in another tab, jump across to that, because we want to check what we've got in our profit and loss here. You can see we've got 4806, right? So we're dealing with profit of 4806. I'll jump back to the form, line that up so it's easier for you to follow. Have a look in the business section there. We'll scroll through there. So you'll see whatever was in that Excel file that moved into XML and then into the financial section has come through here. And if we scroll down to the bottom, let's have a look. We see something different to the 4806, but certainly what we have is we've got some reconciling variables to consider in here. And if we jump over to the reconciliation section, we've got our 4806, which is the accounting profit, right? So we're happy with our accounting profit, and we need to understand how we're arriving at some quite different tax profit and what the implications are and whether we need to make any further adjustments in here. So you can see there is an expense adjustment. So there's an expense reconciliation adjustment on depreciation. Let's jump into that and see if we can understand what's happening there. So what we've got is in this case we've got no tax facts for depreciation. We've only got accounting facts, and hence that's why you see that expense adjustment in the reconciliation section. What it's essentially telling you is it's saying expense reconciliation adjustment, non-deductible expense, whereby the accounting value is non-deductible. So we need to now report the tax value. Now that may well be the same, it may be different if you use our Logit depreciation tools. In this case, depreciation is not activated, but if we went to settings, and I'll quickly activate it for you just to show you how we might do that. So settings, and we need to go to depreciation, and we'd need to activate it. In this case, you can see we've turned on organization uses an external depreciation platform. Okay, so we'll simply rely on the fact that what we're working with is an external depreciation platform, and therefore we need to pick up the tax value from that external depreciation platform, whatever that is. Maybe you're tracking depreciation in Excel rather than in Logit. So this is the tax value for depreciation, right? Now you can see there won't be any reconciling difference. So there's no reconciling difference from the point of view of depreciation, but we still have an investment difference. So what have we got here? We've got dividends and interest, right? Okay, so we need to report the dividends and the interest, and to do that we need to go back up here to the four squares and activate and turn on dividends and interest. So I'll now save that. And let's go back into income. Now you can see we've got interest. You can see the difference, and that's causing the reconciling difference, right? Because we don't know. I mean, it may well be the case that what we have here is, sort of $3 worth of TFN credits and $15 worth of interest. And now we've got no difference. And dividends, whatever those are, NAB, CBA, whatever companies paid the dividends, we've got $75. Maybe those are all franked, or maybe they're a combination, maybe 25, maybe 50, 25, now no difference, but maybe there are some franking credits associated with this, maybe somewhere around $11 or something. So now we've still got a difference, but of course we understand what that difference is now. It's the franking credits. So if we come in here, we don't see these being equal. We don't see the investment adding the tax-related investment income, which would increase the income, and less the accounting investment income, which will reduce the income. Now, I'll try to make these the same so you can see that if they are the same, you're not going to get any difference there. And we simply take out our franking credit back into the reconciliation, and now we get a perfect reconciliation between our accounting profit and our tax profit, bearing in mind that there could be business-related income and expense reconciliation facts, and there could be investment-related income and expense-related facts. Regardless, use your reconciliation module to understand and track the differences. Let the system handle the reporting of the values.